Hello, everyone. Welcome back to another episode of Policy and Profits. I hope you guys didn't miss us last week. We were involved with the inauguration down in D.C. for President Trump. EJ, I know you're a D.C.er and you were very busy last week. How are you, my friend?
It has been chaotic to say the least, but good kind of chaos, right? This is the good kind of disruption that we need, Anthony. So I am doing better than usual. How are you doing, sir?
Doing well, doing well. The city was literally insane. I've never been in a situation like that, and I've been, through some ridiculous security scenarios. But the gates, the mousetraps they built, portable TSA scanning sections within green zones to leave or enter green zones, and then they were actually moving the gates intraday. So one street, if it, H went through at 2 o'clock, at 3 o'clock, you're walking through trying to get in. It's blocked off at that point. Have you ever, is that typical for DC, or was that just over the top Secret Service, FBI, military
No,
security stuff?
Anthony. This was so atypical. I've never seen anything like this before. And now I saw it all in the build up to the inauguration because Saturday afternoon, stupid me, tripped, fell, rolled my ankle terribly. So I couldn't even go to events Saturday night. I missed everything Sunday. I couldn't even go to any of the inauguration events on Monday. So I wasn't there in person for those events. But what I saw the entire week leading up to Saturday was exactly what you're saying. All these ridiculous mousetrap contraptions, the concrete barriers, the not just chain link fencing, but I mean, we're talking pretty thick gauge steel fencing going up everywhere in DC. It looked so incredibly dystopian. And I gotta wonder, after seeing some different videos and stuff of people actually having to go through exactly what you're describing, all these checkpoints, it makes me wonder, was the cold the only thing they were worried about on inauguration day, or was there another reason that they, had to move everything inside and had to really limit the audience and have so many extra security procedures? Let me just put it that way.
Yeah. I mean, Trump himself said it was the cold, which I would expect. Although he's pretty, from the hip on everything. But it does make you wonder. I mean, the security measures were above and beyond. I was down there with my wife. It was a great day, but we had an invitation in the afternoon to watch the inauguration from a certain spot and walked the streets for over an hour in the freezing cold, trying to figure out how to get from point A to point B. And it's like that old Saturday Night Live skit from the 80s. You can't get there from here. And that's kind of what it was like. You could not get there from where you were. It didn't matter what you did. So we missed that. And then we did end up going to the Liberty Ball at night, which was very nice, but just jam-packed at that point. And if you didn't roll your ankle beforehand and miss it, your feet were thanking you, because it was 7-8 hours of standing and watching and waiting. And so it was cool, but the security was out of control. And I agree with you. I'm not quite sure it was the cold, but I am very happy that the day went off the way it did. It was just a fantastic day. It was true Americana, and very proud to be an American and watch it that day. It was awesome. And the energy in the streets was insane. I mean, I literally spent some time just walking around the streets, which I don't do. I'm very much like go where I have to go and then go back from where I came. And that's kind of how I maybe stop for a steak and a bourbon on the way. But the streets were amazing. I was just walking around. We were just taking it in. It was pretty cool. It was a pretty cool event.
Yeah, I'm amazed, Anthony, exactly what you're talking about. The optimism that people have right now. I mean, there really is. It's as if there's something different. Something like the air is electric. I know that sounds crazy. It sounds like hyperbole, but it's just the sense I get when I talk to people, when I see folks on the street, when I talk to whether it's consumers or business owners, doesn't matter. And I mean, actually, you're even seeing it in the macro level data when we look at the Dallas Fed manufacturing survey that just came out yesterday. I mean, the comments there were absolutely extraordinary from respondents, where they all talked about how much rosier the outlook is, and even the fact that they're having some of their businesses, they're on the consumer side, that is, some of these major firms are purchasing manufactured goods that aren't going to be delivered for 6 or 12 months from now. So they're putting in the order today, and it's going to take a long time before they actually get delivery. But they're expecting such better conditions in the future that they're increasing their orders today. So that gives an idea of just the explosion of optimism we have relating to this new golden age that the president is promising us.
That's awesome. That's exactly what we want to hear. And I think what the markets have reacted to, coming through the election, into the election, running up to all-time highs, and then taking that hit December, and then bouncing back to its all-time highs. One thing that could derail the move, which I know we talk about a lot, is inflation. I want to bring up this rate of inflation chart that you ran on X. I think it's a fantastic chart showing trend lines of where we were, where we are, and where we're headed. Go through this with me a second, because this is going to be a big deal. This is directly related to economic growth, debt and deficits, rates, all of it. I think inflation is, I know you agree, kind of the canary in the coal mine and going to be a landmine.
Yeah, so what we basically see here are three very distinct periods when it comes to the rate of inflation. So you have the economic expansion that occurred essentially from the end of the Great Recession to when Joe Biden took office, right? So from, I believe it's June of 2009 when the recession, quote unquote, officially ended.
Mm-hmm.
That's not to say the economy was great thereafter, it wasn't, but that's when the economy stopped shrinking. So from that point all the way until Joe Biden takes office, inflation rises an annualized rate of 1.8%. In other words, if you average that entire span, what's the equivalent of that per year? It comes out to 1.8% year after year, from 2009 to the very first month of 2021. And you can see, I mean, there are certainly periods there where it deviates from that, right? That's just the trend line.
Yeah.
What's interesting is as soon as we get to January of 2021, that trend immediately changes. And not only does it change, it goes much higher. It goes up to 8.5% at an annualized rate. So think of that, from 1.8 to 8.5. Huge, huge jump. But what's interesting is how tightly it stays on that trend during the period from January of 2021 all the way up until I believe it's June of 2022. So it stays very, very tightly on that trend. So the month-to-month change in prices is actually very, very consistent. Prices were steadily rising month after month after month. Again, a couple months are a little bit hotter or a little bit cooler, but the overall trend is very, very tight. After June of 2022, what happens? Well, the inflation rate slows, but it's staying very elevated compared to where it was before Biden took office. So now it's at a 3.0% annualized rate from June of 2022 all the way up until the latest data we have is now December, right? So December of 2024. So, and again, what's interesting, if you can look at the chart here and see in blue that portion, those increases in the CPI are very, very tight on trend. You compare that to the first portion in green, which again is from the end of the Great Recession until Biden takes office. There are plenty of deviations there. Yes, it's a trend over time, but there are plenty of deviations. The period, once again, from June of 2022 until today is very tight on trend. This means that we really have never been trending towards the 2% target. We have been trending to 3%. We've arrived there. There's no indication we're going any lower anytime soon. And there's a lot of reasons for this, right? There's why did inflation spike from a 1.8% annualized rate to 8.5% during, I guess you could say, like about the first half or so of Biden's presidency? That happened because of the insane levels of government spending, which were essentially entirely paid for by the Federal Reserve. Now, in the summer of 2022, that's when the Fed starts taking their foot off the gas and starts putting it on the brake. And sure enough, you get a pretty sizable downshift in the rate of inflation. Now, prices are still going up. You know, people sometimes confuse this, partially because the White House used to do it on purpose. You know, what was the Cabbage Patch lady who used to be the press secretary? What was her name? I'm blanking on it. She was like the quintessential diversity hire. She was black and a lesbian and something else. I don't know. Maybe she had diabetes or whatever. But Corinne Jean-Pierre. So she kept saying, we have the best production staff in the world. Let me tell you, folks, they make us look so good. Okay. Believe me. She would get up to the microphone time after time and tell the American people, inflation has come down and we are working to bring down prices even further. inflation coming down doesn't mean prices are coming down. Those are two different things. Think of it like you're driving down the highway in a car, right? And if you're going 60 miles an hour down the highway, the mile marker on the side of the road keeps going higher and higher as you go further. That's the price level. It keeps going up. How fast it's going up, well, that you look at your speedometer to see that. That's your speed. If you slow down to 30 miles an hour, though, those mile markers on the side of the road are still going up. The price level is still going up. It's not going up as fast as before because you're not driving as fast as you were before, but prices are still going up. So that's what we're seeing here. Why is it that prices, again, are going up at a 3% annualized rate when they used to go up at a 1.8% annualized rate? It's because the Fed keeps creating money, and they're creating it faster than the economy is growing. One of the ways that they've been doing that, this is so sneaky, so just like this is evil genius type stuff right here. The Fed uses face value when it's counting its portfolio holdings. So
I'm going to ask you about how the president talks about inflation. So two times over the past 2 weeks, the president said inflation was 9% when he came into office. Is the president misleading Americans on that, or does he just not realize that inflation was 1.4%?
So, and thank you for the question, because I know that we got a lot of incoming on this yesterday. And look, what the president the point that he was making is that the factors that caused inflation was in place when he walked into the administration, when he took office. As you know, the pandemic caused inflation around the world to be by disrupting our economy and breaking our supply chains. As you know, we had to act quickly on dealing with the supply chain. He put together a task force. You saw the president do that.
What's crazy is there's two different indexes we have. One's put out by S&P Global, and others done by the Federal Reserve Bank of New York. And these two different indexes look at supply chain conditions. The one looks at supply chain pressures. The other looks at excess capacity. But basically what they show is that supply chains have for a very long time actually been either back to where they were before the pandemic or in better shape than before the pandemic. In fact, by the time Biden takes office, supply chains are already starting to normalize. So this idea that somehow 18 months later, inflation peaks when supply chains are already back to normal and export prices actually came down. I mean, it's total nonsense. It has everything to do with the fact that they spent too much money and the Fed paid for it by just printing that money. And how is the Fed continuing to do that today? Because what's crazy, Anthony, is they've raised interest rates, right? And they've been selling off their balance sheet. So you would think, all right, that means they're extinguishing money. When the Fed hands you a security like a treasury bond and you hand the Fed cash, what's happening? Well, that cash goes back into the Fed's magical checking account with a zero balance, meaning the cash just goes away. Poof, it's gone. The money is extinguished. It no longer exists. That's what should be happening. The problem right now, and the Fed knows they're doing this, is the fact that the accounting that they use just looks at the face value of their securities held outright. So if they have a treasury bond let's say the face value is $1 million, and because interest rates have gone up since that bond was issued, as you know, those interest rates go up and the price on the bond goes down. So now they're rolling off portions of the balance sheet. They're selling that bond for $750,000, let's say. It's $1 million bond. And what do they do with the proceeds of that bond sale, that $750,000? They're going out and they're replacing that $1 million bond with another $1 million bond. You say, okay, but they only had $750,000 from the proceeds of the first bond sale. So where did they get the $250,000 to make up the difference? They just create it.
Print it.
So even though it looks like there's been no change in the total securities held by the Fed, they are actually adding liquidity to the system today. And obviously they're going to add less when there's going to be a slight decrease in their holdings, which is what's happening right now. But the fact of the matter is they are still adding liquidity. They are still keeping their foot on the gas, even though they're pretending it's on the brake. So this is why inflation continues to this day. And you throw on top of that something we were screaming about last year, the fact that they were cutting interest rates right before the election, blatant election interference, frankly. They were doing that, and it's going to cause more inflationary pressure in the economy this year. So they tried to give a boost to Harris, and now Trump is stuck holding the bag. I'm sorry.
In 2021, you did say that inflation was transitory. Do you regret saying that now?
I regret saying it was transitory. It has come down, but I think transitory means a few weeks or months to most people.
I can't. I just can't. I don't. You know what? I'm glad we've moved on. These are all faces I'm not going to miss at all. The lies are just ridiculous. They rely on the American people to be so stupid that either they don't understand or they don't look into it or they just don't care because they don't see the connection between their policies and what they're saying and how it affects everyday life. And it is complicated, but these people, KJP, Yellen, Powell, they're all cut from the same cloth, and they've really created. I mean, it is a train wreck, and President Trump and the administration need to come in and clean up. It's really, it's horrible. I want to touch on one other thing, and then I want to go over to the markets because we had a really exciting day yesterday with the DeepSeek and the kind of the beginning of what could be the blow up of the bubble in AI and tech and the markets in general. So we talk about the Fed, and that the accounting for the assets on the Fed balance sheet is amazing because the fact that they're actually goosing inflation as it looks like they're just rolling assets on the balance sheet is insane and it's disingenuous. I mean, it's really, it shows where they are and how almost devious they are with how they're managing our money in our country. You talked about, I know the Fed balance sheet went up twofold, so call it 3 trillion to 9 trillion from pre-pandemic to the peak of Bidenflation. And correct me anywhere if I'm wrong. This year, 2024, heading into June, it looked like we were starting to see a slowing in inflation. And from what I understand, that was because the Fed was actually tightening or quantitatively tightening, selling off balance sheet assets. By the sale of those assets, pulling in cash from whoever's buying the asset. And then, as you said, poof, that capital, that cash, that slush is gone. So we're reducing the slush, we're reducing the supply of dollars, and we're taming inflation. And then in June, they stopped that. They stopped the quantitative tightening, and we start to see inflation tick back up as they continue to print and we continue to spend. And then in September, we get into the rate conversation, which really didn't mean anything. Why did they stop the tightening in June? Do you have any thoughts on that? Because I've been looking at it and I don't see why, especially if they wanted to cut rates, why they weren't continuing to tighten from June through the end of the year and kind of balance the rate cut, the politicized rate cut heading into the election. Why did they stop the sale of assets?
Well, I think the reason that they slowed down the sale of assets the way they did was because they essentially wanted to keep giving a boost to the economy. Basically, it's the analogy I like to use. I think Milton Friedman might have been the first one to use it, but I really like the analogy of alcohol. A lot of monetary policy works like alcohol, where when you initially start drinking, you get buzzed or whatever, you feel good, and then you're hungover the next day. So all the good effects come first and the bad effects come later, right? If you had to get hungover first and then you didn't feel good until tomorrow, nobody would drink. I mean, it's basically the principle behind working out, right? It sucks while you're doing it, and then it feels good later, provides benefits later, which is why so few people take care of themselves. So that's basically the way a lot of monetary policy works. And so the positive effects will come first, and the negative effects will come later. And so they should have kept selling off assets at a much faster pace. It would have taken them several years to return to the pre-pandemic level of their securities holdings. But now at this much slower pace, I mean, it's not just a few years; it's going to be a few decades before we ever get back to where we were. Which means it's never going to happen. No, because there'll be another crisis, there'll be another emergency, there'll be another excuse for the Fed to just go on another buying spree.
Yeah, and it's the onion adds layers to it, right?
Yes, exactly.
And part of the problem is, and part of why I say that is, as you're talking, I'm thinking about the mortgage rates and the 30-year fixed rate, which we, show the correlation between the 10-year yield and the 30-year fixed, which is a direct effect on the consumer and buyers of real estate in the country. But as the Fed was selling off the MBS, the holdings, the mortgage-backed securities that they held on the balance sheet, they were actually I guess part of the reason why rates were going up on those assets, because they didn't have buyers willing to step in. Prices on those securities, that debt drops, and as that drops, we see rates rise, right?
Right, exactly, and so as the Fed, we're kind of dealing with the hangover right now. We had several years there where the real reason why you could get mortgages at less than 3%. My cousin Vinny, yes, I have a cousin Vinny. My cousin Vinny literally has a 30-year fixed mortgage at 2%. He is stealing money. Think about all the inflation we've had over the last several years. He is paying back dollars that have lost a fifth of their value compared to when he took out that mortgage. I mean, that's astonishing that whoever holds that bond has taken a complete wash on it. But because the Fed created an appetite for those bonds, it created an incentive for lenders to sell securities that could be packaged into those bonds, or excuse me, to sell mortgages that could be packaged into securities for those bonds. It gave the banks an incentive to do it at literally any rate. It didn't matter. And so that's what happened when the Fed went on its huge buying spree and gobbled up trillions of dollars of mortgage-backed securities. Now they're doing the opposite. Yeah. Now they're letting all those securities roll off their balance sheet. And the result is there's no more appetite. The private marketplace can't sustain that kind of demand for mortgage-backed securities, which means the people packaging the securities, they don't have any demand for the mortgages themselves because they can't get rid of the securities. And if the people who buy mortgages aren't buying them anymore, then the banks don't have an incentive to make those loans to create the mortgage in the first place. So the supply is way down and the demand is still super, super high because people can't afford a place to live and they're trying to get a mortgage. So that's where you get this huge imbalance, excess demand, decreased supply. It's pretty Econ 101 right there. You know, the price is going to go up, and the price in this instance is the price to borrow money or the interest rate.
Yep. Yep. Interesting. It begs the question, how do I know that's not a bunch of ones with a 20 wrapped around the outside? But,
how do I know that's not a bunch of ones with a 20 wrapped around?
But we'll move on from there. So I want to start to talk about the markets a little bit. We had a big blow up yesterday. Not a big blow up. We had a blip. We had a down day. It was a significant move. The overnight E-mini contract. So my Sunday nights is a little window into my world. I head to the desk for 6 o'clock. Normally my wife has made me a beautiful dinner, and I sit down and I eat my dinner and I start to watch the futures open at 6 across the board. And then I'll watch Asia. And then if it's interesting, I'm still sitting here at 3 a.m. when London opens, and then kind of roll into my week. So came in last night at 6 o'clock and we were having a pit bull and a chihuahua fight, the pit bull being President Trump, the chihuahua being Colombia, talking about tariffs on coffee, which had AOC in a tizzy, which, I don't know. She's outspoken on the wrong things, has no clue about the right things, and otherwise is being paid our tax dollars to report to Capitol Hill each day. Which he may or may not do. Anyway, I come in, we're kind of a little bit of shaky in the futures, and now all of a sudden this DeepSeek story starts to gain some traction. Mm-hmm. So the DeepSeek story, very simply put, is we have the Stargate announcement last week from President Trump, $500 billion or $100 billion in investments, going to $500 billion, going to $1 trillion. We're the AI leader in the world. We're building infrastructure, we're building capacity, we're building computing power. We're going to have individual power stations running, generating power to run these facilities. Everybody's involved. We have OpenAI, we have Oracle, we have SoftBank, we have the Saudis, we have, NVIDIA involved and Microsoft involved. World stage leading, awesome. Now, China comes out with an announcement Sunday that, oh, by the way, we have this thing called DeepSeek. We've done it without using NVIDIA chips because we can't use NVIDIA chips. And we have made more efficient AI, better AI. We consume less power. We've done it for a fraction of the price. And, by the way, we're leading. So what's interesting about this is not the fact that China came out. Well, the fact that China came out with it's very interesting because it almost was like information warfare. And I wrote quoted in an article yesterday in the Post saying this, and I was actually lucky enough to be on Trace Gallagher last night talking about this. Stinchfeld, like the this was an informational Scud missile, or that they actually blew up our financial markets with one headline. So I want to talk a little bit about what we've seen. This is the overnight E-mini S&Ps going back to mid January, early January the 13th, and then heading into 2 days ago. We had a 6% bounce back, and that low that we're looking at was actually the low back in November coming out of the election. So we kind of double bottomed there, and the top you're looking at, up 6%, is actually the top that we saw before the sell-off in December. So that's kind of like a double top, the end of a double top. We were down 4.5% overnight in the NASDAQ futures. We were down going on 2.5% the S&P futures. These are massive, massive moves in the overnight without the cash markets even being open. So this was before stocks were actually trading. Forget even the pre-market in stocks, which is 4 a.m. The 9:30 market, massive liquidity in cash markets, not even open. The fact that China made this announcement, it was strategic, no doubt. Whether or not DeepSeek is able to do what they said it can do doesn't matter. What's important here to me is, and kind of an interesting point is, we've been saying, and I've been writing about it now consistently for 2 months. Our markets are over-levered and overextended on very weak breath. So what I mean by that is, back in 2022, if we rewind the clock, inflation was becoming an issue. Russia, Ukraine was an issue. The Fed just started to talk about raising rates. The market freaked. We took an 18% sell-off or so back, heading down to those lows in September, October of 22. Now, in September, October of 22, the narrative changed. And the market did this intentionally, because this is what the market does. We went from a rates conversation and a Fed conversation, because now that's a losing conversation. And we went to an AI technology conversation. And at that point, a new market was born. And the new market was born on the back, the very narrow back of AI, NVIDIA, the Mag 7. From that point on, we've seen this tremendous run to all-time highs. The S&P's up 60% from those lows. The NASDAQ is up 90% from those lows. The Mag 7's up 200% from those lows. NVIDIA is up almost 900% from the 2022 lows. So the Mag 7, NVIDIA included, account for about 65% of the earnings growth in the S&P 500. So think about that. 7 names out of 500 account for 65% of the earnings growth. By the way, that earnings growth trend is falling. They also account for about 40% of the market cap, because the S&P 500 is market cap weighted. These are massive names. They are the only ones producing any real growth at this point, and they have carried the market to all-time highs. Now, what does China do? China comes in and says, I'm going to put a little hole in this balloon that you all have inflated in the U.S. markets, and I'm going to see how you react. So how did we react? Well, you can see from the chart the futures were very upset. Cash market was just as upset. We lost $1 trillion in market cap across the board. NVIDIA was down 17%. And the losses extended to some of the energy companies, to the utility companies, to everything was down, because they're trying to grow this narrative of the AI story. The bottom line is, with one headline that there's apparently competition in the AI space, I don't know why no one thought there would be competition at some point in AI. If this is really the generation, I mean, really it's the new arms race, but if this is really what this is going to move markets and move our society forward, the same way the internet did back in the late 90s and 2000, the fact that no one realized there would be competition is kind of silly. And just by saying, hey, there's competition, we're actually ahead of you and we can do it cheaper, we can do it faster, we can do it more efficiently, we can do it with less power. We lose $1 trillion in market cap. Absolutely amazing, and very telling that we need to be very careful of the market. If the market is going to react that way to simple competition in the AI space, think about how fragile the market is at all-time highs. If we go to the S&P, I have now the cash index, the daily chart for the 500.
Okay.
This is kind of what we're talking about. So you can see to the left of that chart, that gap up in November. That was November 5th to November 6th. And then we ran up to the first red circle, which was the first top, end of November and heading into December. If you remember at that point, and you can look back at my newsletters, I started pounding the table at that point that we were overextended, we were breaking, and we were going to see a real drawdown, which wasn't a popular call because it was December coming out of what ended up being a 20% year, a second consecutive 20% year. But we had a great month in December here at Island Capital, and we were net short across the board. So we see that top breakdown in internals, breakdown in momentum. I have two VIX signals that I look at as well, spot VIX, as well as the term structure of VIX. Everything was saying to be out, risk off. We took that note. We were short. We made money on the way down. We then started to rally back. We retested November 5th high and then rallied back to the all-time high. That's the second red circle. That's where we were when DeepSeek made the announcement. And you can see that massive gap down yesterday when I pulled this chart of where we were in the middle of that consolidation area, actually, the second and third red dot lines, which are support resistance lines in the chart. The point to all of this is I continue to see the daily chart and the daily count as volatile, and I'm a net seller near term, despite these rallies. I don't care. I'm not interested in buying into the rallies here. I may trade around the fringe a little bit on them, but when I say net seller, and I had a couple of questions about this because of the newsletter, net seller meaning if I'm going to be stuck anywhere with a net position on the book, it's going to be short. It will not be long. I may be strategically long for these little rallies. That's not my game. That's not where I live. If I thought this was, August of 24, September of 24, then I'd be net long. Net short here, short term, and I've seen some real damage created, technical damage, weekly, monthly. So intermediate term, long term, I see damage that I haven't seen in a while done to the indices, done to the S&P 500. Those things need to resolve themselves before I can feel like we're going to break out and move higher. I don't feel that way, and I wrote 2 or 3 days ago that I don't see that resolution coming. I see price resolving itself to the downside. When we see all-time highs at a double top with one, increased volatility, lack of conviction, and extended PEs, and I said this before and I'll reiterate, forget what everyone's talking about on Wall Street. Forget reported, forget forward. Those numbers will change. They always do. Shiller PE, the inflation-adjusted PE, is almost at its all-time high, which was late 90s heading into the tech bubble. So we are just below that peak of 44 at a 38, 39 now in the inflation-adjusted PE ratio. We are expensive. We are very expensive, almost at all-time highs as far as how expensive stocks are. We are very concentrated with breadth. There is a lot of volatility. There is a lack of conviction. And if one headline like DeepSeek can create a 4.5% drawdown in the NASDAQ and a 2.5% drawdown in mere hours in the S&P overnight, there's something to consider. So to the upside, maybe we retest all-time highs. I don't think we will. Maybe we slightly violate and go above those all-time highs with divergent internals. Possible. The real move, the real risk is to the downside, and I would stress that very, very strongly. I think we are easily set up to test 5,700 again on the S&P. Futures right now at 6,080, so that's quite a ways lower. Cash right now, S&P, just for reference, at 6,055. I think 5,700 is definitely doable. And I can easily see us down towards the 5,000 level as far as retracement levels and where this could start to resolve itself. Valuations could start to come into turn, and we can kind of wash out and kind of reset this market. So be very careful. They will talk about this as a one-day blip. They will talk about this as we don't even know if DeepSeek can do this or not. That's true. We don't know. And I don't trust the CCP. But I will say that if one headline about competition in one sector could hit the market this hard, when 2 days prior people were talking about 7,000, 7,500 on the S&P, and then we're running for the hills the next day, that's a real thing. And I think we need to consider it. So risk here, intermediate, longer term, very much to the downside. And that is my profits section for today.
Anthony, that's awesome analysis. Yeah, as you were saying a lot of that, I was thinking to myself, like, this almost feels like our Sputnik moment, if you will,
Yeah.
where, right, like we've been told, oh, the stupid Soviets, right? They can't, uh, they can't put a screw into a piece of wood, right? And we're so far ahead of them in the space race, and then all of a sudden, that chiming beep of Sputnik, going through space, kind of rattled everyone's cages, and everybody here panicked. And in a lot of ways, I feel like we kind of do the same thing with China, where we talk down about the communist Chinese party. They're nothing. No, they're a pretty big threat, and you're absolutely right. Nvidia has, I think, largely been selling everyone a big bag of hope, and who knows, maybe they make good on that. I don't know. This is certainly not my area of expertise. Their business, that is, but I do know that they are expecting earnings to somehow just absolutely explode in the pretty near future, based on the technology that they have. And you're right, it was sold to everybody as, hey, we are the only game in town.
Yeah.
Everyone's going to have to come to us. And then now all of a sudden, maybe that's not the case. And I mean, it is crazy to think that the disruption of essentially not even a single industry, but a single company can rattle everybody's cage this much. That's scary. And then the fallout, and you were describing some of that, Anthony, when you mentioned, utilities, for example, right? If all of a sudden, electricity demand is not going to be what people thought it was, now it's filtering down into other industries too. It really is amazing. Kind of feels like if not a house of cards, it feels like a single point of failure.
Well, we called it a KFAB a few weeks ago.
Yes,
And
that's
it
right.
really
Yes.
it really is what it is. I mean, look, I do love to hate them. I do. It's in my genes, and I happen to be I believe myself to be a good short seller. And there's different reasons for that, but it's just where I live. I'm more than happy to be long. I want to make money. That's the end of the day, and that's the reason that I sit here every day. But I do like to get short. I do look for those opportunities. But aside from being a general hater, it is, there's just so much that's not. There's so much fake about the market at this point. The valuations and the stories, and how, even to the point of how are we going to benefit and actually produce profits from AI? I don't know. And I mean, I've heard some great ideas about, cancer research, and I've heard some great ideas about more efficient, product production lines and sourcing products more efficiently. And there's different ways you can talk about it, but I just don't see why we would be in a position where a name like NVIDIA is up 900% in 2 years. Like, I don't, and there is competition. And we've been sold the bill of goods that there's no competition. We've been sold the bill of goods that this is the future and this is all there is. And then you're starting to pull in, they want to make this a broader market rally, right? Which they need to. So the question, then you start to see the Nat Gas name and the midstream names, which have been off the charts. I mean, you look at a name like Targa Resources or Constellation Energy. These names have been off the charts. These are energy, Nat Gas names, nuclear names, because we have to power all this processing, the GPUs and whatever the case may be. Utilities, arguably the most boring, disgusting sector ever created by God, has been an outperformer for the last year. And I was actually out with a utility analyst from one of the larger banks a couple of months ago, and he was laughing. He said, what people don't get is utilities grow at whatever their pace is, 2% a year. They don't change that. Whether or not there's an AI story, whether or not there's, this projected massive need, they don't change what they do. So for the generalists that have stepped into utilities, say, and they're buying up these stocks because of the fact that there's going to be this massive need for electricity, they're not going to grow the way you need them to grow to pay the price you're paying. So guess what? Prices will come down. The utilities, nat gas, the energy names, the infrastructure names, some of the industrial names, the chip names, the software names, the hardware names, the Oracles of the world. It's all, it really is a KFAB. We're way over our skis. And we'll see how it plays out. But if we continue this information war, if we continue this new arms race, which is exactly, what we're talking about, it's going to be a pretty slippery slope, and one way for our adversaries to pull capital directly from the U.S. is days like yesterday, because it was a very easy way to basically eliminate $1 trillion in wealth in U.S. markets with a headline. So it seems like that was the goal, and the goal was accomplished, and we'll see how we respond to that. EJ, I want to thank you for the time as always, and I want to end with a hat tip to somebody who stays kind of under the radar and in the shadows, but has definitely caught my attention. And I love kind of the very quiet, badass personality that's emerging. I want to hat tip Barron Trump for the handshake with Biden at the inauguration. I want to go through what we think he said, and I want to discuss whether after he said it, Biden literally shit his pants because his face did not look good, or Biden was just trying to process what was said to him. So let's go to Barron Trump post-inauguration speech by his father. Little handshake, little hat tip, not. Oh, now Joe's thinking to himself, oh shit. Now it gets better. Walks over to mom. Mom says, try and be nice. Now my favorite. Barron says, yes, mom. And then on the way out, just gives him a glance. A big fucking watching you, Joe. So we'll end it with this. It's all you. What did Barron say, and what did Melania say?
You know what? I think you're absolutely right. Melania said, "Try to be nice. Try to be nice." Right? In terms of what he said to Biden, I don't know. It could have been something like, "We're coming for you," or something like, "You lost twice now." I don't know. Something like that.
Now, did he do it in
so
a Trump voice impersonation or not?
What's that?
Did he do it with the Trump impersonation, or did he do it in his voice?
Probably his own. He's got to step out from his father's shadow. Actually, the boy's so tall, he's not in anybody's shadow. Who am I kidding?
Not at all.
Dear
not
goodness,
at all.
that is a tall young man. I loved when I think it was I'm not sure what event it was on Inauguration Day, right? Maybe it might have been at Capital One Arena. Where Trump gave a shout out to several different people, including members of his family that were there, and he mentioned Barron. He's like, some of you may have heard of him. His name's Barron, and Barron stands up, does a little wave to the crowd, and then you can see he starts to go sit down, and then he stands back up and does one of these.
That's right. That's right.
And people loved it. It was
That's
great.
Right.
People loved it. Okay, so.
Oh my God,
love that young man. And the rumor was, and Trump actually ended up confirming it then, but the rumor was that it was Barron who was telling him, Dad, here's all the social media stuff you have to do. Like, not just the Truth Social, which obviously Trump has been doing for a while now, but here are the different podcasts you need to do. Like, it was Barron who was telling Trump, hey, listen, you got to do Joe Rogan. You got to do this person, that person. These are the different folks you have to go talk to, because their audience is unique in this way or that way, and you're going to reach more people and deliver your message. I mean, it's incredible. So, hey, more power to the kid, right?
It's awesome. It's awesome.
Very tall son named Barron. Has anyone ever heard of him?
There it is.
So great. So great.
All right, on that cheerful note.
It's awesome. We'll see where he ends up. EJ, take it easy, man. Enjoy DC. And
I'll try, Anthony. But thanks. Hey, it was always a pleasure chatting with you, my man.
Talk to you next time.
All right, till then.